Hello, and welcome to the Inner Compass. I want you to imagine a scenario. You've been pouring your heart and soul into your creative passion after your 9-to-5 job. Maybe it's a YouTube channel, an Etsy shop, a freelance writing gig, or a podcast like this one. And then, it happens. You make your first real money. Maybe it's $100 from a sponsorship, or your first payout from YouTube. The feeling is electric, isn't it? It's validation. It's proof that your passion has value. But then, a few moments later, a quiet, slightly panicked thought creeps in. Oh, what do I do with this money? Do I have to pay taxes on this? Do I need a separate bank account? Is this a business now? If you've ever felt that mix of excitement and anxiety, you are in the right place. This is the critical turning point where a passion project begins to evolve into a part-time business. And the number one mistake that new creators make, the mistake that leads to stress, burnout, and tax time nightmares, is continuing to treat the money side of it like a hobby. Today, we are going to fix that. This episode is your financial blueprint. For the next hour, we're going to walk through the essential, step-by-step process of setting up and managing the finances of your creative side hustle. We'll cover everything from business structures and bank accounts to the magic of tax write-offs and how to manage a fluctuating income. My promise to you is that by the end of this episode, you will have the clarity and confidence to manage the financial side of your creative work like the professional you are. Let's build your foundation. Part 1. The foundation. Setting up for success before you make another dollar. Before we even talk about taxes or profits, we need to build a solid foundation. These are the non-negotiable first steps that will save you from massive headaches down the road. Step 1. Separate yourself. Understanding your business structure. The moment you earn money from an activity that isn't your main job, you've technically started a business. In the US and Australia, your default status is a sole proprietorship, or a sole trader in Australia. What it means, it's the simplest structure. There's no legal paperwork to file. You and your business are considered the same legal entity. It's easy, but it also means there's no liability protection. If your business gets into trouble, your personal assets could be at risk. What about an LLC? You've probably heard of an LLC, or limited liability company. This creates a separate legal entity for your business, which protects your personal assets. It's more complex and costly to set up. My practical advice, for 99% of part-time creators starting out: just operate as a sole proprietor, sole trader. It's simple and free. Once your side hustle starts generating consistent and significant income, say, over $10, $15 a year, that's the time to consult with an accountant or lawyer about whether forming an LLC makes sense for you. Don't let this step paralyze you at the beginning. Step 2. Separate your money. The most important rule. If you remember only one thing from this podcast, let it be this: open a separate bank account for your side hustle. Today, mixing your business and personal finances is the single biggest administrative mistake you can make. It makes bookkeeping impossible and tax time a nightmare. How to do it? Go to your bank, or an online bank, and open a new, dedicated checking or transaction account. It doesn't even have to be a formal, business account, at first. Just a separate personal account. The golden rule: all income from your creative work goes into this account. All business-related expenses are paid from this account. Your personal salary, your groceries, your rent, they never, ever touch this account. Let me tell you the tale of two YouTubers, both named Alex. Alex A made about $5 from their channel last year. They let the money go into the personal checking account. Come tax time, their accountant asked for a list of their business expenses. Alex A had to spend an entire weekend, probably 20 miserable hours, scrolling through a full year of personal bank statements, trying to remember if that $80 Amazon purchase was a new microphone or a birthday gift for their nephew. It was a stressful, inaccurate mess. Alex B also made $5, but they had a separate business account. When their accountant asked for expenses, they just printed out the bank statement for that one account. It took them 15 minutes. Alex B. Step 3. Track everything. Your simple bookkeeping system. You need a system to track every dollar that comes in and every dollar that goes out. The simple start. You can begin with a simple spreadsheet. I recommend Google Sheets. Create 4 columns: date, description, income, expense. Every time you buy something for your business or receive a payment, log it immediately. The next level, once you start having more transactions, consider using beginner-friendly accounting software. In the US, a great option is QuickBooks Self-Employed. In Australia, Xero is very popular. These tools connect to your business bank account, automatically categorize transactions, and make tax time incredibly simple. Part 2. The Taxman Cometh, a creator's guide to taxes. Okay, let's talk about the scariest word for any new business owner: taxes. But I promise, once you understand the basic principles, it's not scary at all. In fact, it can even be empowering. Disclaimer: I am not a tax professional. This is for educational purposes only. Please consult with a qualified local accountant for advice specific to your situation. Principle 1. You are now your own employer. When you get paid from your 9to5, your employer automatically withholds taxes for you. When you get paid from your side hustle, no one is doing that. You are responsible for paying your own income tax and, in the US, self-employment tax, which covers Social Security and Medicare. Principle 2. The magic of business write-offs, deductions. This is where it gets good. A business expense, or a write-off, is anything that is ordinary and necessary for you to run your business. For every dollar you spend on a legitimate business expense, you get to subtract that dollar from your business income, which means you pay less tax. So, what can a part-time creator write off? So much. Equipment, the camera you bought, your microphone, your lighting, the new laptop you use for editing, software and subscriptions, your Adobe Creative Cloud subscription, your Canva Pro account, your Epidemic Sound membership for music, your website hosting fees, any software like TubeBuddy or a scheduling tool, education, that online course you bought to learn video editing, the ticket to that creator conference, that book about marketing, all business expenses. You are investing in your skills. Home office deduction. If you have a dedicated space in your home that you use exclusively for your business, you can deduct a portion of your rent, mortgage interest, utilities, and internet. This is a huge one. But make sure you understand the rules. Marketing and advertising. Any money you spend on Facebook ads, Google ads, or promoting your work. Let me tell you a quick story about Liam, a freelance photographer. Liam wanted to buy a new, high-quality lens that cost $2. He hesitated for months, thinking, that's so expensive. Then, he spoke to his accountant. The accountant explained that since the lens was a 100% business expense, it would reduce his taxable income by $2. If Liam's marginal tax rate was, say, 30%, that deduction would save him $600 on his tax bill. So, the real, after-tax cost of the lens was only $1.400. This completely changed his mindset. He wasn't just spending money, he was making a tax-deductible investment in the quality of his work. Principle 3. The 30% rule, your tax time savior. To avoid a massive, stressful tax bill at the end of the year, you must do this. The rule: open another separate savings account and name it tax account. Every single time you receive a payment for your side hustle, whether it's $50 or $5, you immediately transfer 30% of it into this tax account. Do not touch this money. It is not your money. It belongs to the government. By setting it aside immediately, you will always have enough cash to pay your tax bill, and you might even have a pleasant surprise left over. Part 3. Managing the flow, the creator's cash management system. One of the biggest challenges for creators is managing inconsistent, fluctuating income. One month you might make $3 from a big project. The next, you might only make $150. If you just spend what's in your account, you'll have a roller coaster of a financial life. The solution is to pay yourself a consistent salary from your business. To do this, we use a simple bucket system. How it works: all your income for the month accumulates in your main business checking account. Then, on a set day, say, the last day of the month, you sit down and allocate that money into 4 different buckets, which can be separate savings accounts. Bucket 1. Tax, 30%. As we just discussed, This is non-negotiable. The first 30% of your revenue goes directly into your tax savings account. Bucket 2. Owner's pay, your salary, e.g. 50 to 60%. This is the money you transfer to your personal bank account to pay for your rent, groceries, and life. Even if your business earns $3 one month, you might decide to only pay yourself a consistent $1.500 salary. This creates predictability in your personal life. The rest stays in the business account for next month. Bucket 3. Reinvestment, your growth fund, e.g. 5 to 10%. This is money you intentionally set aside to buy that new camera, that online course, or to run ads. This is your budget for growing the business. Bucket 4. Profit, your bonus, e.g. 5 to 10%. This is crucial. It's a reward for you, the business owner. It's a war chest for the business. Or you can use it to give yourself a bonus for a great quarter. It's the money that confirms the business is actually profitable. Let's look at MIA. MIA runs a successful Etsy shop selling digital planners. For her first year, she just spent money directly from her business PayPal account. She bought new software, paid for ads, and also bought her groceries from it. She had no idea if she was actually making money. Then she implemented the bucket system. Now, all her Etsy income sits in her business account. On the first of every month, she allocates the previous month's earnings, 30% to tax, 10% to reinvestment, for new design software and Etsy ads, 5% to profit, and she pays herself a consistent salary of $1.200 from the remaining 55%. If there's a huge sales month, the extra cash stays in the business account to smooth out a slower month later. She feels completely in control. She knows her business is healthy, and she never fears tax time again. We've built the entire blueprint. We started by creating a solid foundation with separate accounts and a tracking system. We demystified taxes and the power of write-offs. And we've just created a cash management system to handle the ups and downs of a creator's income. The core message of this entire episode is a mindset shift. The moment you start treating your passion project like a real business financially, two things happen. First, you dramatically reduce your stress and anxiety. Second, you give your project the structure and respect it needs to grow sustainably. Taking your finances seriously is the ultimate act of taking your creative work seriously. It's what transforms you from a passionate hobbyist into a confident CEO of your own small, powerful, and growing enterprise. You are building more than just a side income. You are building a more resilient, creative, and intentional life. So, I'd love to hear from you. What is the number one financial question you have about your own side hustle? Or the one you're dreaming of starting? Drop it in the comments below. Let's build a community of creators who are not just creative, but also financially empowered. Thank you for your time and for being the CEO of your own life today.